in today's video, I want to continue by listing the 4 steps that we have covered in past videos. In particular, last video I talked about the job ledger, and maybe might have confused some of you guys because I was just showing you the windows of the software and Sage, but I did not write down or specify the steps. So I want to do that right now before we go into the work in progress asset account to complete the cycle of the money coming into the trust, leaving the trust to third parties, including the claimant, and arriving finally to the operating account. The first thing we did was to register deposit into trust account. For that, we had to register claim number. We also register the job number, case matter. We register the insurance company, and we register the claimant. This last one as vendor, the same as third parties, and this would be public adjuster. The law firm itself is a vendor. Later on, we created an invoice. The invoice, clearly, it is to reflect the deposit or the check images we got in the bank statement or hard copies. I make this clarification because if you're working with past accounting data, they would have to provide you this as a source document by hand. And this is the most efficient way that I've done it to reflect it into the software. That way, the auditor can see how it should work. The auditor will see that you have some sort, or the firm has some sort of accounting control in place. Number 3, and this is something that we also talked about last time, which is we created bills to pay, in this case, the claimant, public adjuster, and we only did the claimant and the public adjuster. This is what we have covered so far until now. Today, we're gonna talk about 4 steps. It's going to be to keep track of working in progress. We're gonna do that through timesheet, so we keep track of billable hours. The billable hours, it will come really handy into the job ledger later on. The reason to keep track of the work in progress is because it's going to serve us as an accounting control, so we can compare how much was billed and how much money got out of the trust account into the operating account per claim number that we have worked. Okay. The 5th step is going to be to receive money into the operating account. In order to do that, we have to convert timesheet into invoice. We also have to receive money into the account. Last but not least, we have to close the work in progress balance. Okay, as I promised before, I want to proceed wrapping up all the transactions from our past video. And as I mentioned before, here we'll see all the transactions that we have discussed in our last video and today's video. There are going to be other transactions that we haven't talked about, but don't put attention to it. That's why I'm going to use this highlight and these other 2 for the different transactions, so you can concentrate in the transactions that we have talked about. Initially, we have the trust account. We received $10,000. Not only that, but also then money got out of the account. As you can see here, we got $2,900, $3,000, and also $4,000. Now we are going to see this reflected on the case matter. $10,000 case matter, $10,000 in, $3,000 out, $4,000, $2,900. Okay, now gonna go back here, and today's video we talk about the work in progress account. It's gonna be this account here. As you can see, we got the 2,000 claim number, $2,900, $2,900 in, $2,900 out. Also, we have the same $2,900 that got out of the trust account. It's this one here, and the $2,900 into the regular checking account. Highlight. I'm gonna mark it as well so you can see it. Important thing to see as well, it is that we have only $100 into the case matter. As you know, I just do this for the sake of this example. This must remain 0 at all times. Now we're gonna go into the balance sheet, and then we have the most important area here, as you know, is gonna be the trust account balance, $100, total liabilities, $100. Okay, now in the income statement here, we got the $2,900 only that came in. As you can see, there's no cost of sale because there's no cost of sale because all the payments were made out of the trust account. It does not hit income statement for the firm. I created myself an example just to show you here. For example, paying $1,000 as an expense from the operating account to a junior account to a front desk, it doesn't matter. Any expense that comes out of the operating account is the one affecting the income statement, giving you here a potential net income. This net income is the one that we have here in the balance sheet. Job ledger, general ledger, balance, it's 100. Balance sheet, 100. Now we're going to conclude with the triple reconciliation. It's going to be job ledger, we got $100. General ledger, we got $100. Balance sheet, $100. Current liabilities, $100. Income statement, no expenses. No expenses. Only the $2,900 that came in and went out of the trust account. Getting all of this in order, there's no way that any auditor can say anything negative about it. You're definitely going to be an asset to your team, and your law firm, it's not going to have any issues with getting away. Using this technique, I can personally tell you that you will do a fantastic job, and your firm will be away from any harm from any auditor. Thank you for sticking with me until the end of the video. As always, if you like it, if you feel that it's anything that brings value to you or anybody that you know, don't forget to subscribe, like, and share with colleagues or even your boss if you want to bring any new ideas as to how you can do your job better.